Hi there, a very good morning and good afternoon to all of you, depending on wherever you're hearing me and watching me. This is Simply Stocks, and I'm live in this live session with you all, and hope you all are doing pretty well. So, this is the stock I'm going to talk about today, and hopefully, you all are doing pretty well with your trading and investment. And Hope to see you all live soon. So I hope you're hearing me and watching me correctly at the moment. Mr. Pawar, hi, good evening to you, and hope you're doing well. I hope you're able to hear and watch me properly. If you can, just send me a message, and we get this, you can say, session begin in earnest. So just before the budget, we get things going. So I'll be here answering your queries as well as we'll talk about one stock and this one, Matthew, a very good evening to you. This one is a very interesting stock, so we'll get things going on that part, and uh, we'll analyze this. So hope you can just follow me in detail. So this is Mirza International. Now, why I feel it looks attractive at this point of time, although it has gone up 3.5% today, looked very good yesterday at 222.22. It went up a little bit. Uh, Very interesting company. First of all, the market cap of the company is pretty interesting at around 2,800 crores. So it's not a very large company. Uh, if it starts performing extremely well, and the numbers tell you, and we'll discuss about the numbers later on in this session, but at the moment, what it seems like is that at 2,800 crore, the market cap of the company is pretty less for such a business as Mirza is doing. So let's just first discuss about what does the company do. So founded in 1975, Mirza International is India's leading leather footwear manufacturer, marketer, and exporter, and it right now owns a portfolio of well recognized brands like Red Tape, Oak Creek, then Oak Track, and there is Mode and Bond Street, etc. And basically, this one Red Tape of it is pretty renowned and is doing extremely well over the last 2 3 quarters, and that's why the company per se is doing well on the numbers front as well. If you look at the geographical breakup, then the company derives majority of its revenues from India, that is 68%, but they have exposure to UK and US. But their exposure is less. Their 70% of their revenue is from India, and the rest of the world is around 9%. So it is very much distributed across the globe, but not concentrated, say, towards, you can say, Europe or US. So that is why I believe that one can probably look at something like Mirza International at the moment, because I don't think the effect of the European operations not doing well will have a huge effect on their numbers. Now, revenue breakup, 33% of the revenue comes from selling branded footwear, 24% comes from non branded footwear, apparels and accessories account for around 33% of the revenue, and leather sales account for around 8%. So there is a total mix of everything that they have, and especially their branded footwear theme is doing well. And remember, they are into the non-branded stream as well, where you can say larger players like Bata or Liberty, etc., are not that much. But Mirza is in there, and that is where they are garnering a decent amount of sales, although margins are less in their non-branded footwear division. But overall, they are garnering better sales from there on in, and that is giving them a better fillip in terms of gaining more market share. Uh, they have increased the presence of Red Tape brand across the board. So Red Tape domestic business has increased from around 140 crores in 2015 to around 715 crores by 2021. That's a huge jump of 5x over that period. So if you look at it, this is what I'm talking about. This is a huge jump altogether. So it's marketed in India through a network of 200 plus EBOs and 830 MBOs. All divisions market this big time, and domestic branded sales is around 30% sales from e-commerce platform, which is also a pretty big chunk. Not that they just sell through their stores. A big chunk of their sales come online. And since you are seeing that most of India, especially urban consumption and upper middle class urban consumption, is moving online, again Mirza is doing a lot of things on that front. So overall, the business per se of Mirza International is pretty strong, pretty robust. It is across the board. It is across the depth of the world, and it has been doing reasonably well. So currently, the market cap is around 2,800 crores at a PE of around 19. We'll discuss about its average PE and the peak PE, and where it lies at the moment in terms of valuations. The stock has fallen from around 380 levels all the way to 230, 220. So there has been a great decline. If I you can say calculate 160 rupees decline from around uh, 380. That is a pretty decent decline in my opinion, around 42%. So the stock is not down 30% but over 40% from the top, and is looking very attractive at the moment. This one stock is I'm looking at currently, but I should be having funds to buy into. Coming to the numbers, and then I'll analyze the charts as well. uh, if you look at it on a quarterly basis, this is what the company has done. The December quarter numbers are still not uh, out at the moment. We have the September quarter numbers. So if you look at here, 482 crores of sales in September versus 393 crores. So there was a decent jump of 85 crores, which is about 20-22% jump in sales. Expenses did increase, but overall they had a margin of around 13% this year versus 12% in September of last year. So their margins are coming back, although they did dip from around 16% in March and 16% in June. In September it dipped, and probably that soured the mood, and since the stock was around 340, 350, it corrected. But at these prices, with margins of around 13-14% at trading at 18 times earnings, it looks extremely attractive. Not much of a debt interest burden, is not that huge. There are depreciation costs in there, but eventually what they did was 26% tax they paid this time around. So if you look at operating, or you can say profit before tax, it's around 45 crores in September of this year, versus around 34 crores in September of last year. So there has been a jump of 30% in there, although it seems optically less because they paid higher taxes. So if we see here, around 26% tax was paid this time around in September, uh, whereas the taxes were around 21% last time around. So since they paid higher taxes, so the numbers in the net profit looks less. Otherwise, if they would have paid say 21%, it would have been the number could have been closer to 36 crores, not 33 crores. So let's take it that okay, if they would have paid 21% taxes, uh, 36 crores of net profit would have been here, versus 27 crores last year, and that would have been a decent jump of 30% in here. So in my opinion, 30% growth in profitability over 20% growth in you can say sales looks a very good, very attractive at around these levels of market cap of around 3,000 crores, not looking expensive at all. And if I extrapolate the numbers all together, they had an EPS of 3.4 and then 2.7. If I say that they end up doing 30% growth in December and January as well, then we are looking at an EPS of 4.6 in December quarter, this quarter, and around 3.25 in you can say March quarter. So overall, what I see is around 4.6 for the December quarter And if you see 2.5 rupees was the EPS in the March quarter, let's have 30% growth in here. So we are looking at 3.25, and you add up the EPSs of the last two quarters of 3.41 and 2.72, you end up getting an EPS of around 14 rupees. Now at around 231 rupees, uh, with a 14 rupee EPS, it is trading at only 16 17 times. Very attractive in terms of FI, only in terms of FY23 EPS. In terms of FY25, say 2 years from now, it looks very, very interesting. So in my opinion, Mirza International is something to really look at. If you look at its balance sheet, if we go there, uh, we see that their balance sheet looks pretty decent, and what we are looking at is uh, right now, we are looking at a situation where their reserves have grown. So from around, say, in 2018, the reserves were around, say, in 2017. So around 5 years back, 478 crores, and now it is around 814 crores, which is pretty good. Their borrowings have reduced, in fact, from around 360 crores in 2019 all the way to around 80 crores or so. So their interest burden would have reduced sharply. That is also a very positive thing. Cash flow has been pretty good. If you look at the shareholding pattern, now this is where the game really uh, started. So if we go back, they started buying, the promoters of the company started buying the stock from around 120 rupees, and they bought all the way through from June, between the June quarter of 2021 till now. They bought all the way through, and they bought big time till 220, and FIIs also started buying from the September quarter. And you look at the FII holding, although it dipped in the last quarter, but around 3% from around say 2 years back of less than a percent. And DIIs also have a strong, you can say, investment in here. What has happened is that public shareholding from around 32% has reduced to around 24%. It was around 32% in 1.5 years back. So Mirza International is something really to look at. If we look at the public shareholding in uh, retail, I don't see any major, you can say, investor in here. So this is purely retail investors in here, but it's only 24% of the total holding. So in terms of shareholding pattern also, the stock looks very attractive. Now here comes the best part. So as I said that the EPS, on the EPS basis, is trading at only 16 times. Let's now understand the valuation. I hope you've got most of the points up till now. But we'll see. Hi Buchi Babu. I hope you're doing well. I'll answer your queries in a bit once I complete analyzing the stock in detail. So let me have a look now at its valuation part. So if you look at the PE, so I'm saying that on the basis of FY23, the stock is trading at around a PE of 16. If we go further and look at what the PE ratio has been over the last 3 years, not look at 5 years, but over the last 3 years, this is how the PE ratio have behaved. So the average PE is around 25. The stock is trading at a forward FY23 PE of 16. It's extremely, extremely attractive. If we look at, say, 2021, it used to trade around 16 PE in October of 21 and all. It went up and to around 20 and then came back. And currently, again, it is trading at very less PEs. If we take its average PE of 25 and extrapolate the numbers for, say, 2024, so in that sense, we are looking at a situation. Let me just come back to it. So at 14 rupees EPS, let's say if it continues to grow at, say, 25% and not 30%, even if it grows at 25%, then we are looking at four and a half, something like 22 rupees EPS. And if we say it will trade at around 25 at a PE of 25, we are looking at 550. So a reasonable target, at least for the next 2 years, is around 550. but I think it should be even more. So 550 is a reasonable target over a 2 year period from the current 240 250 rupees. A big upside expected over the next 2 years if the numbers sustain, and that's why the stock was up 7 8%. And maybe there were uh, some large investors buying into the stock, I don't know, but overall on a PE basis looks very attractive. If we look at say market cap to sales, even on that front, something like Mirza International look pretty good. If we look at a 3 year picture in here, now the interesting part is we have not calculated as to how the sales figure could end up being, say for the next 2 quarters. So in December, they did 590 crores. Say if they do another 120 crores or so, then around 610 crores they'll do. If I say something like 20% sales growth, then 610 for December, and you can probably add 90 crores to the March quarter number. If you look at the March quarter numbers, 445 crores of sales came in. I expect 530 crores or so for March quarter. So it's 1140, and you add these two numbers of the last 2 quarters which have come out. So 2100 crores of sales is what we expect, and currently the market cap of the company is 2900 crores. So on a 1 year forward or on a FY23 basis, the stock is trading at only 1.4 times. Not at all, you can say expensive, trading at around 1.4 times. It is also showing the same thing, it's trading at 1.5. Basically it's trading at 1.4 times. On an average it used to trade at zero point 0.7 times, so that has gone up, the 3 year average. But I think if you look at its peak and everything, it used to trade at 2 times. Even if the stock trades at around 2 times sales, the stock should be trading at 4200 crore market cap rather than being at around 2800 crore market cap, 2900 crore market cap, which it is trading at. So overall, I believe yes, the footwear industry is going through a very tough time, but I feel Mirza International is set to perform better over the next 2 years. Uh, let's see how it does, but this seems like with disclaimers applying that it seems like that the stock should end up doing decently well over this tenure of say 24 months or so. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in a greater detail. So, uh, uh, let's begin the session in earnest with respect to answering all your queries in here. Uh, so Bata versus Mirza, I think Mirza International is better. Although I have always supported Bata as a investment bet, but I believe that I believe that Mirza looks very attractive now. Okay. How is the results of KPI Green, sir? Very good results, very decent results. I would put up a podcast in detail by tomorrow, but the results are pretty decent. And in my opinion, I feel that going forward, uh, one can look at a price of around 700 on the stock in the next 6 8 months. I think the stock should end up doing extremely well. Uh, uh, Extremely strong results, and hopefully the trend continues, because at this price the stock is trading at 15 times, so looks good, absolutely look good at the moment. Any view on Coal India at 230? Well, if you are a long term investor and you love having a dividend income coming through, yes, you can probably add here. If you have it, hold on to the stock. But if you are looking for capital appreciation and looking to make money, you should look at the mid cap space. But with a pinch of salt, that there are stocks in which you could be caught napping. So pick stocks according to your risk appetite and then make money there. Otherwise, consistent 8 10%, yes, you can gain in something like 10 12% in Coal India through dividends, etc. See, I think you should look at, although Checkman, I don't really trade intraday or for 1 or 2 days or few days. I've left that probably a year, 2 years back. But what I can say is that probably you should look at investment related theme when you're looking at budget, say an L&T, a Cummins, an ABB, etc., Siemens, and other kind of companies, rather than looking at somewhere else. So that's my call. They are probably consumer oriented, also the page industry for that matter, and something of that sort. But really, I'm not that into whether to really look at the budget themes only. See, I'm not very gung ho on the real estate space. But to tell you frankly, I do not understand in detail the real estate stocks, and I have burned my fingers in it earlier as well. So I completely avoid it. And Godrej Properties is the best in the pick, but I understand you're down 30% and the stock is not doing anything. I believe that probably going forward over the next few years it should perform if there are plans of you can say government into the real estate arena. I think eventually the stock should end up performing. So Loris Labs came out with subdued numbers, not great numbers, but still the stock did extremely well. So I have a feeling that one should be looking at a situation where uh, one should hold on. I won't say that one should be looking to uh, buy more, but I think at these prices it's a hold for me because numbers weren't good, Ashim, but the stock has also fallen a lot. See, Buchi Babu, I need to look at how Dawat is performing at the moment and then probably let you know. That's LT Foods, I guess you're asking about. So currently the stock is at 115, doing extremely well from the lows. I think looking at the charts only, if I look at on a very short term basis, you should buy it around above 120, 122. If it goes above 122, 123, keep a stop loss at 117 and look for something like 140, 145. On a slightly longer basis, a 6 month basis, uh, your 50 DMA is around 115. The stock is around 115 at the moment. Probably any breakout from 120 levels you can buy. So at 120 with a stop loss at 115, you can look for say something like 140, 145 over a 6 month period. So yes, you can probably look at buying the stock in that sense. Okay. So Zomato is something interesting at these levels, look attractive between 45 and 50. It does look attractive, Zomato, so one can look at, but you should be having a 2 year, 3 year time frame. It's not going to perform immediately. That's what I feel. So in that sense. Baljit, I don't track banks, so I won't be able to comment on it, whether it's Axis Bank or any other. So I'm sorry for that, but won't be able to comment much on it. Yeah. Which stock are you talking about, Ramesh? Sikachin? Are you asking of Sigachi, or is there something else that you're asking about? So Swapan Kilpest, I am positive. Disclaimer: I am an investor there for long, and very positive even after what the company has and end up doing with the flip flop with respect to putting in that money of 120 crore and buying some company, but they have not gone into. But very much looking forward to the results, and it's trading at around 12, 13 times earnings. Very attractive in the business that it is into. Okay, let me just see Sketch in India. All right. So they are into building materials, etc. A very small company. So this I'll analyze this company in detail and I'll let you know. Trading at a PE of 14. So we'll look at it. I'll keep it in mind, analyze it, and then come up with a video and then I'll let you know. Numbers do look good. If I see uh, right now trading at only zero point 0.1 time price to sales, but I have to see how the margins etc are for the company, around 3% or so. So I'll definitely analyze this one and will let you know, because eventually there are no profits, very less profits that are coming in. Somewhere they do losses, sometimes they do profit. So probably that is where the concern lies, because no profitable company hardly ends up having higher P or trades at higher P, etc. If you look at the shareholding pattern, FIIs are in there, but they are less now compared to what they were earlier. DIIs are virtually non-existent, and there is a decent investment from public shareholding. So I'll do a complete analysis in here, and then we'll give you a detailed analysis on it in a video probably. So Sequent, in my opinion, Khalid, is an avoid. Numbers have not been that great, and I would say one should avoid completely something like Sequent. Piramal Pharma, again, Mr. Pawar, is an avoid. I would rather prefer buying into a DVs, which have fallen so much from a 2 3 year perspective, rather than something like Piramal. Haramba and you can say Piramal, both. I mean, they were, especially Haramba came out with decent numbers, 1 or 2 quarters, but I won't say that one should get into it now. In terms of defense, Mr. Ashim, I believe that there are a number of stocks that I would say that one can look at. One can definitely look at MTAR. So, if I may just open that, I think MTAR is something that is coming back after a major, you can say, correction. It's up today as well, but a stock that looks good from a 3 4 year perspective. It can double over the next 3 years. That's what it looks like. It has corrected from the top. So this is something to something to look at. Absolutely. Pokorna is a decent company. I won't say it's a good for long term. The numbers have been up and down, but one can definitely look at it in abysmal markets. That's where someone can look at something like a Pokorna. So that's the call. All right, thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Kindly do support me on Patreon. Thank you.